Hey, John, good to see you as usual. Today we have a really special video because inflation we're talking about, it's on everybody's mind. The consumer price index rose 6.2% in October from a year earlier. That's the sharpest increase since 1990. Such a big deal that you were asked to be on NBC San Diego to speak with Dave Summers about what people can do to fight inflation. You were their expert interview. You did a great job, but you didn't have time to talk about how it affects people who are in retirement, which is something you specialize in. And of course, higher inflation means higher withdrawal rates to satisfy the cost of living, which is really bad news when you're retired.
Yeah, absolutely. I mean, inflation not only is, hurtful to the whole economy in general, but to retirees living off a fixed income,
Right.
it can really be detrimental. And
Mhm.
and for the vast majority of retirees, they don't have pensions. They're living off their assets. So this is going to increase their withdrawal rate. And obviously, the more you're withdrawing, then the shorter amount of time your money is going to last you. So even people with pensions, you're now finding that you may have to dig into and start taking withdrawals because of inflation. So as I said, inflation erodes purchasing power, and that can really wreak havoc for a lot of retirees who aren't prepared.
Right. And something else that we wanted to talk about, because I know you're very passionate about it, and that is taxes, which again is really important when you're retired. So higher inflation means higher taxes on all those products that you purchase. And again, on a fixed income, that can be troublesome.
Yes, yes. So no one likes paying taxes,
No.
right? So taxes do come into play because, as we mentioned, if you're withdrawing more, that means you have higher ordinary income. If you're pulling from those tax postponed or tax deferred accounts, or if you have taxable accounts, it means you're paying more in capital gain taxes. So we have to be cognizant that higher inflation will lead to higher capital gains or income taxes. But the other thing, as you mentioned, Aaron, if you bought something for $100 last year and you were paying 9% in a VAT or a purchase tax,
Right.
and now that is at $125, you're now paying a 9% tax rate on that good
Right.
at $125. So yes, taxes are going to go up across the board.
Right. It adds up. And so I think that leads us to what you said was the key to fighting inflation, which is essentially control what you can. And for most people, that means controlling your spending, because if not, then we might be toying with adding too much debt.
Yes. So, two key debt instruments that a lot of people use, especially retirees, are your home equity line of credit and then those dang old credit cards.
Right.
And if you are now putting more money on those credit cards or you're taking out loans to fund your lifestyle, you're paying more interest, which is still eroding your life savings and your purchasing power. So you really have to be cognizant, especially with the credit cards and their, ludicrous, up to 25% APR that you may have on those.
Oh, that's so scary. Absolutely. So then I think that what we need to be asking ourselves, retired or not really, is what's the best investment option if we are in a high inflationary period?
Yes, and this is discussions I'm having with our investment team, kind of going forward. But traditionally speaking, uh, your main investments to hedge against inflation are equities, commodities such as gold, um, and bonds, or especially Treasury inflation protected bonds.
Hmm.
Now, the one thing I will tell you about, and we're kind of in a perfect storm against bonds, is that since we're in a low interest rate environment, higher interest rates could hurt your bond value. So if you're going to choose or look at bonds, then you need to look at shorter duration. But historically speaking, those are the traditional investments that have been designed to hedge against inflation.
Right. And like you said, though, you've been doing so much research because I know you, John, you are a very good student. And you said that you are offering some special options, though, to clients. And what are those for investment options?
Yeah, and one of the things that I've been having discussions with our investment team is really offering alternative investments that have a little bit hedged to not only inflation but downside risk, and those are, hedged equity, where you're not using bonds but you're using some puts and options on some investments to hedge that downside risk, but also attempt to outpace inflation, and some of our structured notes, which offer some also offers some downside protection based on market conditions. So, those are some things that we're thinking out of the box to be proactive for our clients.
Absolutely. Well, I just have to say again that you did a really wonderful job on that news story. And I know you have it on your website. So if people want to start there to watch it, you have it. But if they want some more advice and maybe want to hear more about, again, those hedged equities or structured notes, what's the best way to reach you?
Well, and you mentioned, the investments one more time, and why it's important to seek an advisor, because all those investments that we just discussed, Erin, have certain amount of volatility that for a lot
Right.
of people, you may be unwilling to take on. So there is no perfect investment. You have to weigh the risks and rewards of those investments. So if you'd like to come in and talk about it, give us a call at the office, 858-935-6210. Or you can visit our website, www.gosecurus.com. And there you can schedule either a 15-minute phone call to answer any questions or a 90-minute complimentary consultation.
That's great. John, thank you.
Thank you, Erin.